Welcome to the Real Assets, Real Leaders podcast, a show where we meet with leaders from across the energy, infrastructure, and real asset space to talk through their careers, their motivation, and their leadership ethos. My name is Joshua Fowkes, founder of Sonderometric Executive Search. I hope you enjoy the show. Welcome to the Real Assets, Real Leaders podcast. My name's Josh Fowkes. I'm your host. And today I have the privilege of being joined by Emma Tinker, CIO of Asper Investment Management. Emma, lovely to have you here.
Thank you for having me.
Absolutely. Emma, I want to spend a bit of time doing two things today, talking firstly around Asper and some of the work that you're involved in, and then a little bit later on spending a bit of time talking about your career as well and how you've got to where you've got to within the energy sector. So if it's okay with you, we'll start with Asper. And I wonder if we could begin by digging a little bit into Asper as a platform and actually the mission behind Asper and what it is that you are trying to do.
Yes, absolutely. So Asper Investment Management, we are a private equity firm. We manage about 1.3 billion euros in client capital, and we focus on investing to build businesses that develop and build large-scale sustainable infrastructure that delivers decarbonisation. And we invest in the businesses and the projects themselves as well in an integrated way, sort of platform businesses, if you like. And if we talk about our mission or our approach, we describe our mission as to build the new, which really captures the essence of what we do. So we are builders. We build new Greenfield sustainable infrastructure. And we're helping the development companies scale up to do more and more of that and build those projects. And we invest in getting the projects built and operational. And then as appropriate over time, we help those businesses also establish the other capabilities they need to further operate, add value to those asset platforms.
Great. And Asper, as a business yourselves, what does that look like? How many staff have you got? How long has Asper been in existence for?
So we've been in existence in this form since about 2016, 2017. Okay. We actually established initially from 2002 onwards within a larger private equity firm called HG. At that time, it covered a broad range of different sectors. And we grew up within HG, and then 2016, 17, we span out and have continued as an independent business since then. And we have about 17 people.
Oh, great. Wow. So you've been able to kind of spin out, set out with the very specific mission that you talked about, and then attract a team, I imagine, who buy into that mission.
Yeah.
Wonderful. That's great. So I want to dig a little bit more into, I guess, the infrastructure growth equity piece and the platform building piece, because as you've rightly said, that is something which probably differentiates you from other businesses in the industry.
Yeah, I mean, I think we can talk about sort of what exactly we do, and then sort of why it's perhaps a little bit different. So, firstly, when we look at infrastructure growth equity, it really covers three specific aspects. So, there's project development, so the sort of initial creation of projects that get built, then building and de-risking those large-scale infrastructure projects. And then finally, there is helping to grow, scale up the development and eventually the management operational company that looks after those assets. And when we think about those, there's a big focus of what we do on Greenfield investment. So there is obviously a real need to build new infrastructure projects that deliver the commodities we build, in this case energy, or that we use, in this case energy, in a sustainable way. So that's what we do. There's a huge amount of additionality that comes from that, and it's something that a lot of either investors or even customers look for. So buying something that someone else has built is important. It recycles capital, but it doesn't make change happen, whereas this is really getting the new things to happen. And there's also a huge amount of value creation, very importantly, with that, which is clearly a big element of why people would be interested in putting money into it. So that comes from the core development activity of creating projects and de-risking them and establishing and growing those companies that can do more and more of that. And I suppose those are the elements that are different. They're hard, they're complicated, but they add a lot more value. And it's that element and the integrated way in which we work on them that would be a bit different from some other people.
Yeah, and I love that, and I love that description of, yes, it is important to invest in assets that other people have already built, but actually it isn't an agent of change, and you are being that agent of change by actually thinking, well, what are the areas that we can effectively deploy capital in to actually make a difference to the world around us. And you mentioned a couple of different things there, but I think the first thing I wanted to zone in on was around the, I guess, the technology, the areas of the energy sector that you choose and have chosen to invest in, and then we can talk a bit more about actually the platforms and how you've done that. But what's your I guess what are your investment thesis, if you would, around the sectors, the technologies that you've decided are a good place for Asper to be in?
Well, we are extremely focused in the way that we invest. So we really have two verticals that we focus on in the broader sense. So one is sustainable power infrastructure, mostly
Mhm.
power generation. Um, and these days there's some other bits around that, and you can talk about energy storage and integrating that as well, but those kinds of things. And then the other is decarbonisation of heating and cooling, but mostly decarbonisation of heating.
Mm.
So those are our two verticals, and we go very deep into those. So I would say people often describe it sort of inch wide, mile deep. Those are the things that we know and we come to understand, and we work very, very closely with a series of businesses in that area, and we have the
Mm.
benefit of those learnings across projects across countries, um, from focusing on those things.
Mm.
And there's lots of reasons why we focus on those things. Um, one of the main ones is a real emphasis on the sort of fundamentals of why they make sense. Um, and it's because those are the things that work and that make a big difference to not just delivering decarbonisation, but doing it by fundamentally um, producing energy in a more efficient way.
Mm.
And there was a really interesting report that's doing the rounds actually this week, released by Ember. I'm sure you've heard of them before.
Mm.
They produce reports, and I think they're very good at communicating. So they put it a much better way than I ever have been able to. But I talked a lot about efficiency, and for us, one of the key things we look at. So when you generate clean energy, clean power from a wind farm or a solar farm, fundamentally the physics are a lot more efficient than if you're burning a fuel in a gas
Mm.
turbine. And the same comes to the heat decarbonisation that we look at. You're getting material changes in
Mm.
your efficiency level. And so despite perhaps the challenges you might have in delivering change and fitting into a system that's designed for something different, all the bumps along the way, we think that when you've got those fundamentals right and you're delivering a material improvement in efficiency,
Mm.
in the end, that will give you a good business model that will survive the ups and downs and changes that you've got to come.
Absolutely. And I guess that involves, no, because I know that you're obviously based in the UK and that you
Mm.
invest in the UK, but you've got a much broader geographical spread as well. Am I right?
Yeah, we do. So currently, the countries we are invested in are, UK, Ireland. We do lots and lots of work in Ireland and have done for a long time. Netherlands and Scandinavia,
Oh, wow.
and we have invested in other countries. So it's UK and Europe is our main focus.
Wonderful. And you talk there, I guess, about the greenfield element and the platform element. So we'll dig into both. I guess from a greenfield perspective, I wonder if maybe you could share a bit more insight around how you and Asper perceive kind of the risk element of getting involved in such an early stage and doing something which often may not have been done in an area before, compared to maybe a safer bet and maybe more that recycling capital
Yeah.
approach.
So I think there's both risk and opportunity
Uh-huh.
in it, and I think they often typically go together. Clearly, the risk. There's lots of ways of thinking about risk, but one of the key ways I think about risk is the amount of money you've got exposed to that risk.
Mm.
And I think done well, and it's not always easy to manage this. The key about greenfield project development in particular is that very often you'll have relatively small amounts of capital exposed to risk.
Mm.
And that gives you the ultimate downside protection that you're not going to lose more than a certain amount of money. And, one of the joint venture partners we've worked with for a very long time always teases me. And he's like, oh, you always just give me a little tiny bit of money to work with, and we laugh about that. But that's actually a really key element of the risk management involved. So yes, it's exposed to a higher risk in the potential outcomes for that capital, but you manage it by making sure that you are judicious with that amount of money and the amount of money over time as well. But coupled with that risk sits an opportunity, not just the opportunity to create something and capture the value uplift that comes with that, but also the opportunity to design something well from the scratch. And one of the many reasons we have always invested in projects from the early development stage and worked with development teams to do that is that we understand, because we build projects and we work with long-term infrastructure investors, we understand what they want at the end, what makes a good long-term infrastructure project, what details in the contracts, what detailed elements of data capture of the underlying design of the project. And we can help bring that knowledge and design it in from the outset so that we end up with, from a, if you like, financial product perspective, with a better quality project at the end. And so there's a lot of different elements to that.
I see. And how does it work then? So do you typically have a particular kind of area of the industry that you would like to invest in, and then you seek out kind of early stage founders to work with, or is it sometimes the other way around, where maybe an early stage founder approaches you with an opportunity and then you assess the opportunity accordingly? What typically have you found has been the case?
So it's probably mostly the former. So we're not constantly setting up new platforms. It tends to happen, less frequently than that. But we've typically done our primary research on a particular country, a particular market that we want to invest in. And again, always within these deep focus areas. So it's something we know a lot about. And then we will go out and try to identify the people working in that and go and meet them, call them up, and get to know them, and get to understand whether we can work together. Now and again, someone finds us. Now and again, we get introduced by someone else if we're looking for it. But actually feel that you work in recruitment, so you do a lot of this yourself. And I think actually going out and looking at the pool of potential partners gives you a really good way of trying to meet people and understand, which match can work, rather than just sitting in your office waiting to see what comes your way.
Absolutely. And I think the people element is, it has to be fundamental, doesn't it, to the success of this approach? Because you can have a great investment thesis and you say, if we do X, Y, and Z, then we expect this to happen.
Yeah.
But if the people that you work with either aren't capable of or don't want to do X, Y, Z in the way it should be done, then you're going to have a problem. So I'd really love to dig into your views around what does it take to say, I'm going to commit to this founder or this founding team. What are the traits that these individuals need to have for you to think these are the right people for us to partner with? Because it's not a short-term thing, isn't it? And we'll talk in a minute about some of the success that your platforms have already had. But we're not looking at kind of a 1, 2, even 3 year project. It's a long-term working relationship. So what are you looking for in those early stages?
It's hard to fully describe, as it is when you're seeking to build a relationship with other human beings. But above all, there's that sort of trust and integrity. I think I'm really old fashioned, and I think maybe a lot of people are. I think you can never replace that. There's nothing you can do without that. And that sort of stands well above everything else. And for the teams we work with, again, it's a mutual thing. So we need to be able to build mutual trust. It's very important that they feel they can trust us as well. Probably the next thing then is sort of drive, determination, tenacity, and people who understand that, yes, they want to create value, but that it also takes time. It takes lots of hard work. There is that old saying about, meeting someone who, spent 20 years trying to become an overnight success. It's sort of nothing happens overnight, and all that value creation is something that takes a huge amount of sort of hard work and sticking with it. So you need to know that people are interested in doing that and understand they can get through that journey and are fired up by that. by that challenge. I think the third thing is probably that we can build a shared vision, almost a shared set of objectives, of goals, of we both think that in this market there is this opportunity and we can tackle it this way, and we can, this is the way to build a business that can be successful in this environment, and that we see that in a similar way. And obviously you don't want groupthink, but having that sort of common goal is really important. And then, of course, there's loads of other stuff, the ability of people to lead people, to build teams, to inspire people, to a whole range of much more specific skills, very often technical skills, things like that. But those are probably the key things. Gosh, it makes them sound like superhuman.
And I think in lots of senses, I'm sure many of them are. Certainly with very unique skill sets. And that's probably what gets you and the team excited as well about partnering with them, because you have that almost the kind of two pieces of the puzzle kind of coming together to hopefully create something much bigger than the kind of
it does, and it has to be mutual. We're so conscious this is not a one-way street. People have to choose us. Everyone has choices, and we have to be sort of deserving of their trust and their confidence as well, and clear what we can offer. It's never just money. Money is part of it, but we have to be able to be the right investor, offer the right support, add more value than money. Stick with things and be fair and even-handed and work together through difficulties and face up to them together. There's a whole bunch of things that we need to do to be worthy of being chosen for someone to work with. So.
And I think from that founder perspective, that's a really important relationship, isn't it? Because I guess as investors who have in some senses been there and done that with different platforms. You can maybe see problems which may arise in the future, a certain size or position of a business, which someone who maybe is a really strong founder but hasn't yet got to that position, they just wouldn't be able to foresee. So they need to be able to trust you to be able to navigate some of those trickier elements, and maybe just give them an extra perspective, which is going to keep them on the straight and narrow and stop them maybe falling into traps that maybe you or maybe others may have already fallen into in the past. Can we talk a bit about what the ongoing relationship looks like? And I guess it's a good time to just zone in a little bit on some of your portfolio companies. I don't know if there's anything that you want to share particularly about any of them specifically. But I frequently see news about One Energy in the UK and the new projects popping up in Bradford and elsewhere. And I guess particularly, I think the decarbonisation of heat is a very hot topic in the UK, and the opportunity there is massive. So I'd love to hear, I guess, from an early stage how that relationship and others similar to it kind of grew and your involvement there.
Gosh, well, where to start? So, I think it's very much following the pattern that I've just described to you. So, and building on some of your questions. So, in the UK, I think you had two groups of people, us and the One Energy team, both looking in some ways for each other. So we had invested in sustainable district heating before a couple of times in Sweden and in the Netherlands. And we had understood how the business model works, and that in a large number of circumstances, this is the cheapest way to decarbonize the heating of buildings at scale. And so I thought it was really, really interesting stuff and a really good investment. And we'd had one very successful investment in Sweden, so been through that journey. And we felt that the conditions in the UK were really there for the industry to begin to grow. Some policy formation had happened. The government has been wanting to do some of this. There'd been a big focus on sort of using gas for a while, which isn't something that we do. But then that policy had shifted. So we thought, this is the right time. And so we did that thing that we talked about of trying to go out there and look for all the different people who worked in that industry who might be able to work with. And to be honest, it was very difficult to find anyone because the industry was really at its infancy. So there weren't any businesses really established at that point that you could work with at that stage. But we met two very talented people, Andrew Wetton and Jeremy Bungie, who had a long track record of having worked in various capacities in the energy sector, in the various aspects of the district heating sector, who at that point were consultants. And they hadn't understood that capital would be available for them to begin to start on the project development side. And in fact, the business model of being an independent developer in district heating hadn't yet emerged, and they were the ones that did it. And so we said to them, well, we could support you in doing this. Um, and and that's how the idea came together. And they went away and sort of thought about it and built up a plan. And at that very, very early stage, it's unusual. We actually supported them on our own balance sheet. And we have, for that really early stage risk capital, it's not appropriate to put a lot of the institutional investors into that. So we did that ourselves. We don't always try to do that, but we can if it's needed. And once the first projects had started to take shape and were at a point when they were getting ready to move towards construction, when they need, the risk has changed, there's something real there, and they also need very large amounts of capital. It was at that point that we were able to really put much more money into scaling up the business and into starting to work to build the first project. And so that's how it came about. And then we're sort of going on that journey in stages together as the business evolves. It has to grow and change so much over those time periods as it deals with different challenges of its growth.
Absolutely. And you mentioned there the different stage of investment, and I imagine a big part of the way that you raise capital is telling the stories of the businesses and the platforms that you've worked with, and also sharing really what those opportunities look like as you are looking to bring more investors into to work with Asper. How do you find that process of getting people to buy into the vision of what you're trying to do?
So I suppose we make it as concrete as possible. It's not really much of a vision, and it's much more analytical, because when you are, working with investors, you have to earn their trust and confidence above all. And we covered some of that already. So it's obviously important that you sincerely and authentically believe in the proposition that you are putting forward, and that's because you've done the work. You've analyzed it critically and thoroughly. You've done your due diligence. That you've got a lot of backup to that foundational understanding and belief you have, so that when other people come and kick the tires on it, you can show them the work that you've done. You can go through that. And we have to show them that we have the people in our teams and the systems and the processes to actually do the job of investing and managing their money well. So not only are we building businesses that and working with the management teams to help scale their businesses that do that, but we ourselves have to have a lot of that in place as well, so that we can meet their expectations. And then we have to show them that we, and indeed the management teams, have the right attitude. In the end, when you are investing other people's money, one of the most important things you can do is make it clear that their interests are more important than your own. And so that is also something that you have to demonstrate as you go through it. So those are the processes. And I think the last thing you have to do, especially when you're trying to be that bridge from institutional capital into real businesses in the real world, which is our bit of investing, you also have to listen. You have to listen to and understand, obviously, the underlying businesses, but you have to listen to the investors. They've got their needs, they've got their portfolios to construct. Sometimes you have to tell them it's not the right investment for them, it doesn't meet their risk profile. And again, that comes back to putting their interests first. Sometimes you have to adapt your offering so that it can better meet their needs. And that's part of what we have to do as well.
Yeah, that's really, really insightful. Thank you, Emma. So if we were to maybe look ahead and think of what the future might look like for Asper, are there new sectors, geographies, adjacent models that you're looking at? What would you say the future holds?
So I would say the future holds more of the same. So we talked a little bit, so we're pretty focused. As we said, a sort of inch wide, mile deep. And our growth avenue is really grow from what we know, secular growth in those underlying sectors. And, it's not that we never look around and see what else is going on. And we have looked and continue to look at other sectors, other opportunities as they come along. Sometimes we go so far as to sort of evaluate them in depth. But at the moment, these are the things that we do and we're going to keep doing. And because they have that growth potential, I think really the opportunity for us is actually to grow with them and to keep doing more of what we do, where we feel we have a level of understanding that we can have some confidence in what we're doing.
And does that involve, I guess, growing the team as well within Asper?
Yeah, growing the team within Asper, but actually for our type of investment, where it's really that sort of private equity, growth equity, the big focus is actually on growing the teams in the businesses that we're building. And so, that growth is often quite substantial, and that's a big area of our focus. And a lot of our businesses right now are at the point where we're really helping them build out, in particular, their management teams further as they're going through that scale up phase where they really need to do that, which is fascinating. So yeah, it's all about them really.
And you say fascinating. I imagine that provides a real level of interest for you to be able to support and delve into all of the different types of roles that an operational platform might have, which you can advise on and assist the founders in growing those platforms.
Yeah, it's true. And investing, I always think it's a team sport. You need you need a lot of different people. So, we will help those businesses, but we benefit from and really rely on the expertise of a lot of people that around us. We have a team of senior advisors who we've worked with for a long time with long expertise in different aspects of investing. And we work with a lot of specialists, sort of consultants and broader advisors in the market, so that you can bring in not just the expertise, but the depth of experience in certain areas to do that. Because clearly, no one small group of people can have all of the necessary skills and experience in all of those areas to do that well.
Absolutely. And it'll be really interesting, particularly from my perspective, to see from the outside how those platforms grow and develop and to see them take shape. So I'm looking forward to seeing that. I hope you're enjoying this week's instalment of Real Assets, Real Value. This podcast is brought to you by Sonder & Metric, an executive search firm facilitating leadership appointments across the energy, infrastructure and real asset space. If you're looking to attract top-tier leaders to drive your value creation strategy and realise your growth plans, Sonder & Metric's proven search strategy guarantee exceptional results, all whilst reducing the risk associated with leadership hiring. For more information, visit our website www.sonderandmetric.com. So I wanted to move on and just spend a bit more time just talking about you and talking about your career. And I wonder if a good place to start is for you to tell us, well, what is it that got you into investing, and what is it that got you into the energy sector?
Well, I didn't have a background in anything like that. So my degree was in history, and I actually really enjoyed the podcast that you had done previously with Dan Wells, who's also a historian. Well done, Dan.
Yes.
So I felt that was good, that there's more than one of us. So I didn't know anything about energy or about investing, hadn't really heard much about it. And I had started my career at Arthur Andersen, as then was, which is brilliant because they provided a lot of training. And as you go in as a graduate knowing nothing, so grateful the companies that provide good training and help you work out which way is up. And it was in the course of working there in the first couple of years that I got to find out about investing and what was involved. And why did I get into this? Because I found it absolutely fascinating. And I was just completely captivated with the idea of, in particular, investing in, venture businesses. At that time, this was the late 90s. So there's a lot going on around tech at that time, which is what I was working on. And that process of working with the teams, raising capital, how to invest it in the business, how the business would grow, I just found it absolutely fascinating. And the reason I got into it was just because I had to learn more.
That's great. And you mentioned that you began your career at Arthur Andersen. You moved through VC, and then you spent 15 years at HG. And I wonder if you could maybe share some of the formative lessons that you learned from those kind of early chapters of your career.
Lessons. I mean, gosh, how long do you have? Gosh, there's
We've got about half an hour.
There's so many lessons. Key things that are really, really important. I learned about how to have curiosity in work. People often ask, I want, someone who's really curious, but actually applied curiosity in a useful way to your work is really, really important, but it takes time to practice. And it's analytical, but it's also being open-minded and willing to change your mind and take on new data all the time and consider things from different perspectives. And I learned how important that was, that if you don't have that, you can get stuck on the wrong thing or overlook looking for the next piece of information that would be critical. Obviously, hard work, and above all, like discipline, the value of disciplines and rigor in your work and applying those nitty-gritty disciplines is really important in getting that right. Teamwork. I'm a massive proponent of teams and teamwork. I just think you can do so much more in a team than any one individual you can do. And so the value of building teams and being part of a team that's effective together, being a great team member is also a skill that's really important to have. And the other thing that I often think about is a learning, and it's about the danger of fear. And I think about this quite a lot, which might sound odd, and how dangerous being fearful can be. And I don't mean the opposite of that in a sort of reckless, do anything way, but how people are unconsciously afraid of things, and it persuades them to not examine difficult questions because they're afraid of the answers. It persuades them to not confront tricky situations, not go looking for the contrary point of view because they're afraid it will undermine what they do. And of course, that's a really weak place to be. And that kind of fear can really hold you back and incapacitate you. And so sort of not being fearful as a really, really valuable mindset to have is one of the things I think about a lot. And I learned a lot about in those years.
I think that's a piece of advice that you can apply to so many different parts of life and society. But one of the things that I really liked about everything you just said there is that you didn't say, "Oh, I learned this specific way to do financial modeling," or I learned this specific way to and no doubt you did. But the things that you highlighted there were more around kind of functional behavioral competencies and actually the building blocks of what then, as we're going to talk about, led to a really great career so far. So that's great. If we talk a bit more about HG, you were deeply involved in building out a renewables platform at a time when actually it was still a niche strategy. What stands out to you most from that experience?
Gosh, so many. Well, there was a lot at that time, but I think maybe above all, it was a really fascinating lesson in how to do a new thing. So when we set up the renewables business, it was one of the first couple of funds ever to be created to invest in renewable power generation. So it was a new thing. And it was also new for HG to set up something new that way. And I was 26, very junior, therefore clearly needing the guidance and support of other people. But they also asked me to do a lot, and it was a bit daunting at times. But really having that learning, new sector, new way of investing, new challenges. And yet, despite all of that, we did lots of analytical work. We, didn't compromise on the thoroughness of what we did. But seeing how you put one foot in front of the other and one step at a time, that is actually how you make things happen. And I often, again, think about this all the time because there's a lot of difficult, big challenges we all face in life, in whatever kind of investing you're doing, certainly. And I always think of the joke, sort of, how do you eat an elephant? And the answer is one bite at a time, and it was a real foundational experience in what that is like.
And you obviously enjoyed significant periods of success with HG, which I guess was the catalyst for you and your co-founders to step out and to spin out and to create Asper. I wonder if you maybe talk a little bit more about kind of the process behind that.
Yeah, well, I think the process behind that, HG, when I joined in 2001, was a mid-market private equity firm that covered about 5 different sectors, industrial sectors, that had a sector focus, but they were quite broad. And over the years that I was there, so in addition to us setting up this, at the time, renewables investment business, it became incredibly focused under the leadership of its still CEO, Nick Humphreys, on software. And today it's one of the world's top 2 software investors, and has been enormously successful, and it's incredibly impressive. So over those years, HG was going on its own journey of increasingly focusing on and being successful in software, which was also a sector that was growing exponentially at the time. And then we were growing in renewables, and that sector was also growing. But we just became two, very specialized businesses, ours obviously smaller. And so there just became no point in being together. And so we were great friends, but it was just better for us to separate, and they had a lot to focus on in their area. And in our area, we wanted to grow, but it was, in a different way to them. So we're great friends still. But yeah, it became clear that it was much better for us to continue our path, and we could spin out and take forwards what we've been building as a dedicated unit within there.
Great. So the team that spun out was yourself. Obviously, you took up the CIO role. Who else was it that came out with you?
So there were 3 co-founders in Asper. So it's me, Luigi Petternicchio, who is the chief executive, and Luis Quiroga, who is responsible for our investor relations. And then we had 3 others who were, if you like, sort of junior founders with us, Andrew Clements, Olivier Del Pont-de-Vaux, and Alistair Sykes. And we have to mention a couple of the other team members, but in particular, Debbie Hudgell, who has been with us for a really long time and is our head of operations, without whom nothing would happen and no one would have any fun without her.
That's a great character description there. How did it feel transitioning from maybe being a more established, larger fund to being very much kind of a fledgling outfit with obviously people who had done it and had a proven track record? But was it that feeling of we're starting from scratch?
It was a bit of a weird feeling, because in some ways it wasn't so different, because we were always a sort of a distinct team, a business unit within HG. So it was still the same team doing the same thing in some ways. And then we had the opportunity to sort of add new things from there. So that felt quite the same. But then it was also, there was a bit of that flying the nest experience. I think one key feature was how much you realize how you hadn't fully appreciated how much some other people had done for you. And I think it's really important to say that. So whether it's actually the finance team that had been in HG and all of the groundwork and ongoing admin and support and that they had provided, the day I had to fill in my sort of first VAT return was a terrible day, through to actually appreciating also the management. And it's not until you're in the position where that's your responsibility that you appreciate the decisions they have to make, how complicated that is. You put yourself in their shoes. So there was also that really interesting moment of realization of like, oh, this is what's going on. So it's sort of fascinating to sort of at the same time as do it, stand outside yourself and observe yourself going through it, going, well, that's, that's a really interesting learning.
And was that a period of time that you, I mean, it seems to me that your character, Emma, is that you embrace kind of challenges, as you said, and you get excited about doing things that you haven't done before. Was that how you felt about it back then?
Yeah, I think we felt we knew we were taking risks, but we felt we could take them. We spent obviously a lot of time as well. There was a transition period where we really worked on making sure we had all of the robust systems, processes, rigor in place that we needed to satisfy our investors as well. It was very important that they could see that was done really thoroughly and robustly. So it wasn't a sort of whim that led to this. And we had people that we had to demonstrate could continue to have confidence in the way we were doing things.
Yeah, fantastic. So I'm interested in understanding, I guess, in your role as Chief Investment Officer, how your thinking around investment strategy has changed and developed over the years.
And in some ways, it builds on the point we talked about before about sort of what I'd learned. It's sort of just keep on going further. I think, in some ways, you actually go, above all, it's common sense. But I know that's a sort of trite answer. But a lot of it is about getting the basics right, get the discipline in place. Don't be fooled by fads, by fancy talk. Focus on the fundamentals that we talked about before. Physics wins, maths wins all the time. Cash is king. This is another thing. All of these sayings. In the end, you're there. To buy something and sell it for more than you bought it for. To invest in something and eventually get more out of it than investors have put in, and sort of staying focused and true to those goals. And then there's a lot on the journey. You've got to do that, and you've got to do it each time. You're only as good as your next investment. One of the management teams that we've worked with for a long time, a team in Ireland who I think the world of, one of the things I enjoy so much about them is we would finance a project that we developed. We'd get it into construction, and we'd all sit there in a room back in the days when people were together much more, and go through the process of getting all the paperwork signed, all the construction contracts, do that at financial close. And some people at that point would often have a party, take the day off, but not them. They were like, right, on to the next job, as they're saying. And you learn so much from that people know that it's about the next challenge and what you do. So just having that philosophy of stay on it, on to the next job, stay focused, do the hard yards, it comes from that.
And there's a bit of a duality to your role, isn't it? Because I guess you have the need a fund level to balance that kind of long-term strategy, but you also, as you build these management teams, you need to be in the day-to-day kind of executing the building of those platforms. And I imagine in some of those platforms, things can change very quickly. Markets in different environments can require maybe change of strategy. How do you balance those two mentalities that you have to hold?
I think that's a really interesting question, because I remember having to have this sort of duality and learn it as a skill, because I think there's several things you have to do at once. You have to, as you say, be long-term and day-to-day. You have to be high level and in the detail. You have to be both optimistic and sort of paranoid at the same time. And you have to do that every day at the same time, all of those things. And I do remember finding over the years that you sort of learn how to have that skill to be sort of slightly schizophrenic in the way that you do things. But you're right that you have to be able to do both. And sometimes you have to be there in the day to day and then stop, and maybe talk to a colleague or put a process in place that reminds you to go back and check for that sort of longer term pattern. We set ourselves up processes, meetings ever so often where we deliberately change the focus from one to the other, so that we make sure we don't miss both, and I'm sure we don't get it right all the time, but you're right, it is a challenge to do all those things.
I mean, I read a piece by, he's a guy called Dan Cremens, who's over private equity advisor over in the States. Dan, if you hear this, here's a shout out. But he wrote a really interesting piece that actually the most successful people he's seen, both in private equity from a investing and an operations perspective, are people who've mastered that kind of both and, rather than that kind of either or perspective. Which I think really speaks into I guess your role and how you operate with almost two different hats on.
But I do particularly remember the process of learning it, because I think you can look back and you can go, oh yeah, that was coming together, and I remember how hard that felt 15 years ago. And then you get used to it. So I do believe it's a skill that you can work on.
No, it's really interesting to hear you talk about that, because I think a lot of people overestimate that it's very difficult to go into an environment and almost operate in a way that you think you should operate without having put the hard yards in early doors to say, oh, actually having this mentality is really difficult. How do I train myself to do it, and to kind of wear those different hats and have those different competencies?
It takes time, and that's the brilliant thing about this job. The reason one of the main reasons I was actually interested in working in this type of investing was because I knew, I don't know how I knew, but I could see that you would never stop learning. There is no top of the mountain you would ever get to, no matter how much experience you built up, that you could always have yet more experience. There could always be something more you could learn. And I thought, how fantastic to be in a place. I mean, obviously it's exhausting sometimes, but how fantastic to just never stop learning, for there to be no point you can get to where that's enough.
And that's the exciting thing with the breadth of investment and projects and technologies that you can be involved in. And when you put it like that, it does sound quite tiring at the same time. But I completely get it. I think you need to have a certain type of mentality for that to be something really attractive, and it's obviously something
Yeah.
that the industry does offer.
Mm.
And I guess that mentality, it probably plays into your I guess your broader leadership ethos. So one of the things, Emma, that I wanted to dive into a little bit more was just to get a broader understanding
Mhm.
of your leadership ethos and what it
Mhm.
means to you to be an effective leader.
The way that I do what I have to do, um, what are the things I focus on? Again, teamwork. We talked about that.
Mm,
Really important. Being a good part of a team. You're whatever role you've got in the team, whether you're in charge of something or not. It's always about being an effective part of that
mm,
team. Um, having humility. Having, we call it grit. Sticking with stuff, working through things, never giving up.
mm,
Um, Focusing on what you contribute, not anything else. So making sure you're making a useful contribution, and that's the most important thing that you can do. And also knowing it's never about you; it's about them. It is
mm,
always about the other people. So just focusing more on what you what you're doing to support other people. I think those are the things that are important to me and that I find help me be more effective.
mm.
I wonder if my team is currently howling, going, "Oh my God, that's not how it works at all." But you know, and then old adages, always, always, I try and maybe succeed. You treat people how you want to be treated.
Uh-huh.
Um, as often as you possibly can, do your best to put yourself in other people's shoes. All of those things are so true, and you can never try hard enough
Mm,
at doing those things. um yeah, and then there's just loads of things that you come across on the way in terms of learnings and mistakes. I mean, again, we could spend all day, but things that I've learned, one very dear friend gave me lots of advice, but one of his great pieces of advice was focus on the problem, not the person.
mm,
And actually that's been really instrumental when you come to difficult periods, when actually together with other people you tackle the problem, and it never becomes personal, never becomes about you're doing it wrong, or you know it might mean you have to say, I need you to do that differently, but focus on the problem you're trying to solve.
mm,
That's a really great way of getting through challenging situations. Most people are trying really hard, trying their best, and it helps you be on the same side as you try to tackle things.
mm,
So I think that there's so many, um, yeah, so many considerations like that. And then I think the other thing that we've learned actually in as we've built the business and built teams over time is sort of again having a long-term perspective with people, where you need to be long-term kind, which means that sometimes you have to help them work through difficult things that they find challenging, and say hold the standard high,
mm,
and and support them in meeting that standard, but never let the standard drop, and help them build the capabilities of getting through those things, because in the long term that's what helps them succeed and actually helps the businesses that you're building succeed.
mm.
Things like that we've had to learn, where we've tried, maybe, oh, you know let's soften this here, and actually that just backfires.
Mm,
If you don't deal with the difficult things along the way,
mm.
actually you end up in a worse situation. So I think there's been lots of learnings around that.
Yeah, and loads of great lessons there. And I guess my reflection, doing this more and more, and asking people these questions, is that often the really effective leaders don't tend to consider themselves to be very effective leaders. It isn't something that they think, oh, I am a good leader. But what tends to stand out, certainly to me, is their desire to get stuck in and to work alongside their teams and actually lead, not from a kind of a backward position of pointing people
Mm.
forward, but actually being at the forefront of what the teams are doing, saying, I'm doing this too. And I think the other piece I really liked there for what you said was kind of always assuming the best of the
Yeah.
person, because as you said, the chances are they're trying their hardest as well.
Mhm.
And if everybody assumed the best of everybody else, we'd be in a much better position in
This
general.
is true. Mm.
I would really love to do before we close, Emma, is just to get I guess a bit of advice from you for those maybe either earlier on in their
Mhm.
career, or those looking at either investing or the energy sector as a whole and thinking, is that something I can break into?
Mhm.
Do you have any advice for someone who's in that position?
Um, I do. This is going to sound possibly strange, but just do it. I never once thought, oh, should I break into this area, or shouldn't I? Wonder if that's for me. I'm just like, I find this really interesting. I'm going to give that a go. And so I've always been a great believer in these sort of sayings. You miss 100% of the shots you don't take. Have to be in it to win it. This is true. Give it a go. The worst people can say is no. And I think that is really important. Obviously, so more concretely, don't be afraid to try, but do focus on what you can contribute, not what you get, on what you can offer. And it doesn't have to be fancy, some crazy thing you can offer. Hard work, a great attitude, dedication, determination. Like, these are phenomenal things to build on, especially, in a young person, and shouldn't be underestimated, that willingness to try. But yeah, I think if you find it interesting, try.
And I guess the opportunity is there, and more so as we need more skilled people to come into the sector from other sectors as well, from early stage careers as well, and to actually join on the journey of decarbonising both the UK and further afield as well. It's finding and kind of envisioning people to join into a sector which hopefully will welcome them with open arms.
Yep, don't ask, don't get.
Exactly. No, that's great. Well, Emma, look, it's been fantastic chatting to you. Thank you so much for giving us an insight both into Asper and also into your career as well. This has been the Real Assets, Real Leaders podcast. We're delighted that you've joined us. We look forward to seeing you again for the next one.